speaker side. Ankit is also here. Please kindly try to test your microphone. Hi, Ankit.
Hey guys, how are you guys doing? Can you hear me well?
Right. Yeah, we can hear you. Nice to have you here.
Glad to be here.
Max, Cletus, and Kimmy, and Mike. Could you please try to apply as a speaker? Hi. Hi, Kimmy.
Hi.
Yeah, we can
Hi,
hear you.
James.
GN.
Thank you.
Hi, Max. Are you here?
Yeah. I'm here.
It's nice to hear you. I think only Cletus and Mike, not on the speaker side. Maybe we will wait for 1 more minute and we will start our space tonight. Mike and Cletus, can you try to? Hello, sorry, I don't know who you are.
All right. Hello, everyone.
Are you Mike or Cletus?
Yeah. I'm Cletus. Who
Hi,
you got? You guys?
nice having you here. Mike, can I know Mike? Is Mike here? Okay, great. Let's start our space tonight. I'm not sure if Mike's here, but maybe it's time for our space begin tonight. Okay, hi everyone. Welcome to tonight's space. And the building ambassador of Sunnex. There's been an interesting market dynamic lately. On one side, Bitcoin has pulled back from its highs, with capital seemingly flowing out. On the other hand, SpaceX just closed another funding round and US tech stocks remain strong. Where is institutional money actually hitting? Is this a temporary rotation or a long-term rebalancing? Today, I have invited some guests from the crypto space to break down the logic behind this capital migration. All right, let's have a quick introduction. Hey, Max. Max, do you want to introduce yourself first?
Yeah. GM, everyone. As you all know, I'm Max.
But actually, your internet is not very good because we found a lot of electronic electronic sound when you are saying. Maybe you can try to adjust your network. Next one we have our old friend Ankit. Hello, Ankit, are you here? Can you hear me, Ankit? Okay, I think Ankit is trying to connect. Never mind.
Yeah, I'm back here.
Yeah. Hello, Ankit. And
Okay,
could you
can you hear me
introduce
now?
yourself? Yeah, we can hear you.
Okay,
Yeah. Ankit, hello.
Hey, yeah, so about me,
okay.
my name is Ankit.
I said my name is Kenny James. I'm a Web3 content creator. Can you hear me?
Yes. You have already finished your introduction. This turn is Ankit.
Okay.
Let's let Ankit to say. Hello, Ankit. Can you try to introduce yourself?
Okay, thank
Sure,
you.
yeah. My name is Ankit. I run a venture fund called Not About Ventures, and before that, I've been part of a lot of different blockchains from Stellar to Aptos to Solana, and help them grow in multiple different regions. Right now, our focus is on supporting and funding good projects in crypto. Yeah, that's about me.
Thank you. Previously, also joined our space. I think a lot of audience already know about you, and we have a new friend. Next one, Cletus. Hello, Cletus. Do you wanna introduce yourself?
Yeah, hello everyone. Can you guys hear me?
Yes.
All right, I'm Cletus, an ambassador, a creator, also a BD, also a project gain partnership. So basically, for now, I'm working with HTX, Sonex as creator. So I've been in various ecosystem blockchains. So now I'm with the Tron ecosystem, narrowing down to the Sonex and the HTX. So it's a pleasure to be here, PP, and everyone on the MIC like myself. I welcome you guys to this epical space on X. So thank you, PP.
Thank you, Cletus. May I know which country are you from? Hello, Cletus.
Yeah, sorry.
Oh, which country are you from?
Okay, I'm from Nigeria.
I think we have a lot of Nigeria friends in the Nova plan. Okay, next one we have a new friend, also Mr. Peter. Hi, Peter.
Hi, James.
Could you please introduce yourself to the audience?
Okay, thank you for the opportunity, PP. Thank you so much for this opportunity we have to, express ourselves here today. I'm a content writer. I'm a technical writer. Ship ideas into the space. That's basically what I do. I also want to say thank you for the opportunity. Thank you to all the speakers here that are here to speak with me.
Thank you, Peter. It's nice to having you here, and I found that you posted a lot of Soundnext posts, and thanks for your building. And next one we have another new friend, Mike. Hi, Mike, are you here?
Yeah, I'm here. GM everyone. My name is Mike Lee. I'm a Web3 content creator, an ambassador of HTX, ambassador of Tron EcoStar, member DTCS Academy. Shout out to the host, Sonet, co-host, PP Sonet, and my co-speakers and the co-listeners. GM everyone.
Mike, where are you from? Sorry.
I'm from Nigeria.
Oh, you're also from Nigeria. We got a lot of friends from Nigeria. Nice having you here.
Thank you so much.
Okay, final one. And Cryptify, hello. I think you have already joined our space for several times. You're an old friend, and just a quick introduction about yourself. Hi, Cryptify.
PP. G
Oh, I think your internet's not so good. We cannot hear you now.
Can you hear me now?
Yes, yes.
Okay. See, GM to everyone on the space. It's a great honor to be here today. And what I do is on my bio. You can do it to reach out to my bio and see what I offer on the space. I'm a crypto trader. So I believe that our objective of coming to this space will be accomplished at the end. So thank you so much.
Thank you to having you here again. Okay, let's jump into the first key question. Um, are institutional funds really shifting from Bitcoin to tech stocks? Is this a capital rotation into new tracks or simply asset diversification? Max, can you share your thought?
Yeah. Thank you so much, the PP, for this question. Okay. So firstly, let's understand who institutional investors are. So now, firstly, institutional investors are simply big money players. Think of investment firms, hedge funds, pension funds, and large companies. Now, are they leaving Bitcoin completely for tech stocks? No, I don't think that's simple. Imagine you having $100. Instead of putting all your money into one business, you may put $50,000 into a food business, $30,000 into transport, 20,000 into farming. So I'm just gonna use let me say a simple analogy, a simple example so that everyone understands. Then you put in your $50,000 into food business, $30,000 into transport, $20,000 into farming. Now this doesn't mean you hate the food business. It simply means you don't want all your eggs in one basket. Now this same thing happens with institutional investors. Some money may move into big technology companies like AI, cloud computing, or semiconductors companies because those sectors are very fast. But at the same time, many institutions are still holding bitcoins because they see it as digital gold and long-term asset. So in my view, what we are seeing in it mostly is diversification rather than a complete exit from Bitcoin. Investors, let's own some Bitcoins, but let's also own some fast growing tech stocks. It's less about choosing one winner and more about building a balanced portfolio. The key lessons here. So now let's get this. Here is a smart investor rarely depend on only one asset. They spread the risk while looking for opportunities in multiple sectors. So it's no good you packing your egg in one basket. So spread your assets, spread it so that if you are losing in the other side, you'll be gaining on the other side. Then if you are gaining, like, fortunately, you might be gaining in both sides, but you can't just pack all your assets in one place so that you will be at the risk of losing all. So thank you so much.
Thank you, Max.
Hello, can you hear me?
Yes, yes, of course. It's very impressive. Thanks, Matt. And next one, I want hear from Kenny. Kenny, could you share your thought? How you think different from Max? Do you think it's asset diversification, or do you have another thought, or you agree with him? Hi, Kenny. Can you hear me? I think Kenny got suffering the internet problem. Never mind. Peter, hi, Peter. I found your holding your hand here. Your hands up. Peter, do you want to say anything?
Yeah, yeah. I want to share my own, idea of from what he said.
Okay.
Can I go on? Okay. For me, capital moves to where there is best mix of security, growth, energy, innovation, and long-term conviction. So BTC now represents digital monetary infrastructure, while SpaceX represents physical infrastructure and frontier innovation. So the questions now we're supposed to be asking ourselves is why are institutions buying BTC now? What does SpaceX to do with capital migration and the first question, why are institutions buying BTC now? BTC is increasingly viewed as the digital scarcity, has like 21 million supply, very, very few, not it has a limited supply, and also used as a hedge against against currency currencies and no debasement by some investors, and then plus other things that has to do with it. But the major thing is adoption is growing through the system, but institution participation does not eliminate volatility. Then if you ask me, I would say their investors are putting in, their capital and into BTC and stuff like that because it's major thing for cryptocurrency and it's for SpaceX. Why investors put their money, their capital into that is because when you look at it, AI, the space, energy, robotics, and the whole blockchain thing, infrastructure attracts capital because it can create long-term network effects. So for me, that's like the major thing now. So that's like my own idea for what I've seen.
Thank you, Peter. I think what you said is very, very logic and reasonable. And I think next one we have Ankit. Ankit, do you want to share your thoughts? Do you agree with Peter or Max, or you have another thought?
Yeah, so I think when people are spreading this narrative online that all the funds are shifting from Bitcoin to textbooks, it's actually not true. So uh, technically, if you look at it, right, Bitcoin is also Bitcoin and tech stocks are very correlated. At the end of the day, Bitcoin is also a technology, right? So if you look at the whole patterns, if tech stocks go up, Bitcoin also goes up, and then if tech stocks go down, Bitcoin also goes down, right? So so the big funds and all of them are not leaving Bitcoin for tech. It's just basically that because Bitcoin is trading 24/7 and all the tech stocks are not 7, so it's easier to kind of get your liquidity back from Bitcoin whenever you need it. Uh, or let's say if you want to reinvest it in the IPO rush that's happening, so that's easier to get access to, right? Versus stocks which are not trading 24/7. So I think that's what's happening uh, at a surface level and at a broader level. But I don't think they're abandoning or like kind of leave the Bitcoin or crypto space in total. Because if you look at the whole crypto industry, the uh, the adoption of institutions, kind of holding these assets, adopting the technology has never been so big. So yeah, long story short, institutions are not actually kind of abandoning Bitcoin. Uh, you know, right now they won't, even in the long run. And when you say that, and a lot of people think that Bitcoin and tech stocks are two different things. It's actually not. They are very, very correlated.
Yeah, thank you, Ankit. I think what you said is like think they are not abundant the Bitcoin lends to retail investors. So for retail investors right now, should they keep trading crypto, switch to stocks, or allocate to both? Max, can you share your thinking?
Okay, thank you, PP. Um, this one is just if you ask me, like this is not either crypto or stocks question or stocks. It should be a how I balance both question. Like it should be a how I balance it. Then let me break it down. Crypto and stocks are like two different vehicles. Like a motorcycle is fast, then a car is usually more stable and comfortable. But both can get you to your destination. Bitcoin and crypto can offer very high returns, but they can also fall very quickly. Stocks, especially large US technology companies, are generally more mature business with a real products, customers, and revenues. They may not move fast as crypto, but many investors see them as more stable. For a retail investors, putting everything into one asset class can be very risky. If all your money is in crypto and the market drops 30%, your portfolio suffers heavily. And if all your money is in stocks, you may miss opportunity that crypto offers. So I believe in diversification, just like I said before. I believe in diversification and it's very important. For example, someone could decide, let me see, you share your asset like 70% in stocks, then 30% in crypto, or you do it 50-50, 50% in stock, 50% in crypto. The exact percentage depends on the risk tolerance. Important aspect of it. It depends on the risk tolerance. The most important thing is understanding what you are buying. Never invest because of hype. Never invest because someone on social media said a coin will do 100x, because you can hear many people on social media posting let me see gains. So if you just use because of those hype and invest, you might likely lose. Then now what you need to do is to learn first, then invest. So my answer is very simple. That is why I just put it in a simple way. My answer is very simple. Don't think in terms of choosing one side. Think in terms of building a balanced portfolio that matches your goal and risk level. So I think with this place, thank you for this.
Thank you, Max. I think you gave us a very clear guide, and you help us to have invest trading both crypto and stocks to allocate both assets. So next one we have our new guest, Cletus. Cletus, walk us through your practical thinking.
Yeah, PP, thank you for having me. I believe I'm audible and clear.
We can hear you.
I can hear you. All right. The question is very critical, as per se, and I will agree with what Max have said all this while. But then let's just be a bit realistic. We all know that news trends moves crypto market. And to some extent, stocks as well. So just some few days ago, before the launch of SpaceX, I have a trader friend of mine. He was being optimistic that after the launch of SpaceX, they will make good profits and some sort of good profits. Then there was another trader friend of mine that was like, okay, he likes trading stocks because stocks are more real and more like physical stocks that we can see. But on the other side, crypto BTC is very liquid. Um, on the flip side, when the market goes down, you can virtually lose plenty of your assets. So now the thing is, it's very wise not to put your assets in just one um, basket. So it's very wise to spread across stocks, spread across crypto as well. And besides, a very good investor will always do his own research because sometimes if you follow the news trends, um, you can equally follow the news trends and lose out in many things, lose your assets. But equally, you can, as a good investor and a retail trader, try to understand the market. Like what Mark said about education, educate yourself on the market, check the charts, check the timing, check the trends, and monitor everything before you enter into the market so that you won't um, rush in or FOMO in and just lose your assets. So the bottom line remains that investors are not really migrating from BTC to SpaceX. It's just about the timing. BTC now is suffering. It's more like a trial BTC, but those who understand BTC in the long term won't sell off their backs to trade stocks. Instead, possibly they might sell off part of their backs and trade stocks like SpaceX, not entirely selling off their BTC backs. So that's my own thoughts about investors migrating to trading new stocks. So thank you, PP.
Thank you, thank you,
Thank
thank
you,
you,
thank you,
Alex.
thank you, Alex.
Your opinion is really valuable. Okay, next one we have Peter. Hello, Peter. Could you tell me? Could you tell us your practical thinking? Hi, Peter.
Okay, yeah. Yeah, I can hear you. Can you hear me?
Yes, yes.
Okay, for me, I feel like retailers retailers don't need to, choose between stocks and crypto. They just need to know the edge between knowing which asset is what each asset is meant for, is meant to use, stuff like that. Like the retailers are meant to understand that this you should not choose this or this. It's better you stay. If you understand this part, then be here. If you understand this, then be there. So the edge is just knowing what stocks are for and what crypto are for. So that's just my own understanding of it.
Thank you, Peter. Even though your answer is very short, but I think it's very straightforward and, yeah, I think all of you got very valuable thought to us, and thanks for the honest takes. I think picking a line and building a portfolio, the answer depends on the person, but knowing why you bought matters more than what you bought. Now let's zoom into a sharper question. In 2026, which carries higher risk and which offers greater return potential? Bitcoin or US tech stocks? I want to invite Ankit. Hello, Ankit. What is your view?
Sorry, your voice cut off. Can you repeat the question again?
Okay. So like in 2026, which carries higher risk and which offers greater return potential? Bitcoin or US tech stocks?
Okay, yeah, I think right now, to be honest, if you look at the tech stocks, most of them are already extremely inflated. And if you look at how they're performing, I think a lot of them will still go down a lot because they're like highly overpriced due to the demand in the market. Whereas if you look at look at the Bitcoin right now, right? It's already kind of down almost like 45 to 50% from where it was almost a year ago, or let's say all-time high, right? So I think the bigger upside, of course,
It seems we lost our kids.
Okay, it's like we are losing PP son here. Can we continue so before she returns, we can at least cover some stuff so we can. Max, can you share your own thoughts about what she asked for the last time?
Hello. Please, I can't get the question. Please, can you?
Okay, the question
Like, question.
was
What did she ask?
the question was in 2026, which carries higher risk, Bitcoin or tech stock? Like, what's your own thoughts on that?
Mm, all right. Let me just give you a simple list. Okay, before we start comparing Bitcoin and the US tech stocks, let's remember an important rule. Usually, higher potential rewards come with higher risk. So think of it like you. Let's just use the mountain for instance. Because me, I love using an instance. So you climbing a mountain, the higher you climb, the let me see the better view. But the higher you climb, the greater the chance of falling. Bitcoin is generally considered the the riskier asset. Why? Because its price can move very quickly, and the stock may move 5% in a day. Bitcoin can sometimes move much more within the same period. This volatility creates both opportunity and risk. On the other hand, large US technology companies such as those involved in cloud computing and other established business customers and the revenue streams. Because of that, many investors see them as relatively more stable than Bitcoin. However, stability doesn't mean no risk. Tech stock can also fall when market becomes uncertain. When it comes to potential return, Bitcoin may offer bigger upside because it's a relatively young asset compared to many large technology companies. But the bigger upside also means bigger downside. Like bigger upside means bigger downside. So if someone asks which is riskier, my answer is Bitcoin. Like Bitcoin is more risky than risk than US technology stocks. So I believe.
Okay.
Thank you for this.
Okay, I
Thank
understand.
you, thank you.
I understand where you're
Welcome
coming
back.
from.
sorry, I was I entered again because my internet got some problem. Thanks Peter for the host for being the host temporarily. And next one, I think we have Mike. Mike to answer this question. Is Mike here? Mike is not at the speaker side.
In the listener section.
So Ankit, is Ankit back?
Yeah, I'm back.
Yeah, maybe you can continue because we
Yeah,
couldn't hear you just now.
yeah, sure. No problem. Yeah, so what I was saying is, you know, the biggest upside, or let's say the riskier asset, in my opinion, right now are is US, or let's say is tech stocks, because it's already very inflated, because there has been so much demand about due to AI, and then let's say all the stocks which are linked to AI, whether it's Nvidia or it's robotics, all of them are trading at like extremely higher premiums, which will fall for sure, right? Um, and if you look at Bitcoin, it's already like down almost like 50% from where it was, from its all-time high a year back, and now is a really really good time to kind of uh, into the get into buying more Bitcoin, accumulating more Bitcoin, because when there is a lot of bloodbath happening in tech stocks, all that money is gonna come into Bitcoin. So yeah, I think the much riskier asset is right now buying US tech stocks versus bigger upside in Bitcoin.
Deep analysis. Thanks all. Risk and reward the same coin. What matters is the time frame you are marrying with. Following that thread, I want to throw in an even more interesting angle. Since we can already trade both BTC and US stocks with USDT, why force binary choices? Are perp decks breaking the old logic of having the pick a side? Cryptify, do you want to share your thoughts? Let's hear it. Oh, Cryptify is not at the speaker side. Never mind, we have Peter. Hi, Peter, do you want to share your view?
Yeah, can you please like come clear with the question? I didn't get the question the first time you phrased it.
Do you think perp decks can break the old logic of having to pick a side, like either trade the US stocks or BTC, or you can just have them?
The thing is, if the two things here is it depends on what you are looking for. Bitcoin can turn a small amount into a big amount faster. That's speed. It can also drop faster. But if you're looking for a long-term steady yield, I think tech stock goes for there. So it depends on your own your way. If you okay, let's say we put in $1,000 into each of them. The higher chance of extreme outcome is Bitcoin because of how fast the thing can generate income, and the painful loss can also come with it if care is not taken. But stock has a higher chance of steady growth. It doesn't move as fast as everything just depends on how fast you want your yield to come.
Yes, it's very interesting perspectives. And I found Cryptify is always like sending the emoji. Cryptify, can you try to speak? Or you have any problem on speaking? Okay, never mind. Maybe we move to the final question. I'm opening the floor. What what advantages do perp DEX have over traditional brokerage?
It's just like a bank. Then they help you buy and sell assets, but they control the platform. In terms of a PEPDEX is more like a decentralized marketplace where users trade directly through blockchain technologies. One major advantage is accessibility. I'm talking of PEPDEX now. One major advantage is accessibility. There are many people around the world can access a PEPDEX with just a crypto wallet. They don't always need lengthy account approval or traditional banking access. Another advantage is traders can move between crypto assets and stock related products without leaving the blockchain ecosystem. There is also a greater flexibility. Markets can often operate around the clock instead of being limited to traditional stock market hours. PEPDEX also allow users to maintain more control over their funds because assets stays connected to their wallets rather than being fully held by brokerage. However, we should also be honest about the risk. More freedom comes with more responsibility. If you lose access to your wallet, nobody can reset your password. Smart contract risk also exists. And beginners can make costly mistake if they don't understand leverage. So I don't think PEPDEX are replacing traditional brokers completely. Instead, they are giving traders another option. Traditional brokers offer familiarities and regulation, while PEPDEX offer flexibility, accessibility, and greater user control. Now, the best choice depends on traders' experience, goals, and risk tolerance. So I think this is just all I have for this. Thanks.
Thanks, Max. It's really impressive. Thank you for your thoughts. And next one, we wanna hear from Ankit. Hi, Ankit. What's your thoughts on this question?
Yeah, I think obviously like the real advantages of using a perp index is you can like trade 24/7. You have your own pool of USDT that you can use for everything. You can hold custody of your funds. It's very easy to use, right? There is no like big sign up forms or KYCs and all of that getting done. So you can access it from anywhere in the world and like basically trade on it from anywhere in the world as long as you have USDT or USDC for that matter, right? But if you use a regular broker, it's like generally slow, very expensive, or sometimes even impossible. Um, the only I think the only other downside to this is basically because it's like trading 24/7. You can also get liquidated while you're sleeping, right? Because markets are up and running 24/7. So so that's also a disadvantage where you can lose your money anytime the market goes bad. Versus if you're trading traditionally, there are like just trading hours, which is like 8 to 10 hours, depending on the market you are in. Um, Yeah, and I think the other advantage is that because you have access to your own funds in your own wallet, you don't need to kind of coordinate movement of funds between different intermediaries. If something goes wrong, or you want to take a trade, while you are traveling, it becomes like really really better. I mean, really really messy. So in terms of perp dexes, it's not just better. It's like it gives us all the power that we need, but it also comes with its own downside. So yeah, that's what I think about this.
Thank you, Ankit. Fantastic. Thanks for your thought. And final one, we have Peter. Hi, Peter. Could you share your thought on this question?
For me, I don't have much to say about this particular one, but I didn't even get the question for the first time. But I said let me not stop the space so I can ponder over it. So if you can come with the question again, let me think about it.
You didn't hear it?
I didn't get it the first time. I heard it, but I didn't get what you meant, like the whole phrase and stuff. I was trying to like get it from you, then the space moved on, so I said let me just continue.
Okay, and so the question is like, what do you think the advantage the perp decks have over the traditional brokerages when trading both US stock and crypto? I'm not sure if you try to use our perp decks or use other traditional brokerage to buy the crypto or US stocks. What advantages do you think we have?
Okay, thank you for the question, for getting back to the question. For me, number one is your to keep more control. You usually trade from one wallet instead of depositing funds into centralized exchanges. Just the major thing for me, number one, is just keeping control of everything. You connect your wallet, you trade, you disconnect, everything just on you. You have control over everything. Then your access from almost anywhere. No traditional broker account can set up in many cases. So your access from almost anywhere you can get the access. Trade long or short. You can also trade long time, you can trade short time. So I think that's like the three major thing for me. I feel like it keeps it away from the traditional broker.
Nice. Thank you so much. Incredible, rich discussion. Thanks to all seven of you from 24/7 trading to permissionless access. From capital efficiency to cross asset portfolio construction, every point addresses a real pain point. That was a packed session. Huge thanks to all the guests for the deep insights and to everyone listening. Whether you are in the camp that Bitcoin still holds long term value or the one that tech stocks are the safer play right now, both perspectives give us important reference points. There is no absolute answer in markets, but clear logic, the right tools, and strict risk management will always be the fundamental of profitability. Follow all our guests' Twitter and follow Sonex official Twitter and follow my Twitter, please. And wish you all clear thinking and steady positions in the markets ahead. See you next time. Thank you all. Thank you so much. You can you can quit this space. Thank you for joining. See you next time.
Thank you, PP.
Thank you. Thank you. You have really tried today.
Thank
Thank you
you.
so much, people.
Thank you so much.
Thank you, everyone.
Thank you.